students. See children, it has been a long gap since we have been disconnected on this topic. We had already started off with this chapter of admission of a new partner, and we had done the topics of new and sacrificing ratio. We know how to calculate the new and sacrificing ratio, and now we are moving forward for the treatment of goodwill. Another topic that you see written on the board is accounting treatment of goodwill. Okay, so children, let me actually explain the treatment of goodwill and then I'll move on to the journal entries part. See children, when a new partner is admitted, the situation is like this. Suppose there are two old partners sharing in the ratio of 3:2. A new partner C is admitted for 1/5 share. Now, this is only an imaginary situation. You know that it happens like that at the time of admission of a partner. But what happens when he is admitted? Try to think about it, because it is very simple to understand. Whenever a new partner is admitted, he is supposed to bring two things along with him. Okay, what are those two things? He is supposed to bring an amount for his capital and an amount for his share of goodwill. Okay, so he's supposed to bring his amount of capital and his share of goodwill along with him. Now this amount of capital which he has to bring is logically very understandable, because when a new partner is going to be admitted into a partnership firm, what is that partner going to become? He is also going to become one of the partners of that firm, and like all other partners, he should also have a certain amount of capital invested into the business. Okay, therefore it is very logical for him to bring some amount of capital into the business, or in other words we can say that he has to invest a certain amount at the time of his admission as capital. But what is this? The share of goodwill. He has to bring an amount for share of goodwill. Why? Why is he supposed to bring an amount for his share of goodwill? See children, when a new partner is admitted, we have already studied that a share of profit is promised to him, and he gets this share of profit from whom? He gets this share of profit from the old partners, right? Therefore, if A and B are the old partners in this situation, A and B will be the ones who will sacrifice in order to accommodate C into the firm. Okay, so because of C's admission, what is happening to A and B's share? Their share is getting decreased, or in other words, as I said, they will be sacrificing their share of profit in favor of the new partner C. And therefore, in order to compensate the old partners for the sacrifice which they have been which they are making at the time of admission, the new partner is supposed to bring a share of his goodwill. I'll explain this in brief. See, you know what goodwill is. We have already studied in previous topics. You know how goodwill of a firm is valued. There are different methods of valuation of goodwill that you also know. But here at the time of admission of a partner, goodwill is valued by any one of the methods to which all the partners agree to. And then the new partner is told that such and such is the amount of goodwill of the firm, and on that amount of goodwill of the firm, which I'll take as 50,000 for example, suppose the goodwill of the firm is 50,000, the new partner is supposed to bring his share of goodwill. That means out of this 50,000, he will be bringing 1/5 amount, that is 10,000 rupees. Okay, therefore whatever amount he brings for capital, that is another part, but he has to bring his share of goodwill. And how is that share determined? How is it decided that what amount he is supposed to bring? The goodwill of the firm is calculated on the date of admission with any of the methods. Okay, and then the new partner's share is calculated on the goodwill of the firm, and therefore the new partner has to bring an amount for his share of goodwill. Okay, children, I hope you understood the basic concept related to the accounting treatment. Now I'll move on to the journal entries part, and I'll tell you what journal entries have to be passed at the time of admission of a partner regarding goodwill. Okay, children, so we start from here. When the new partner brings an amount for his capital and his share of goodwill in cash or kind, let me tell you that the share of goodwill which the new partner brings, that is called as premium for goodwill. Okay, we'll be calling it as premium for goodwill, and that you'll be finding when I'll show you the journal entries which are required at this time. So we start off with this. For bringing new partners amount for capital and his share of goodwill, which is known as premium for goodwill. This is the journal entry that is required at the time of bringing an amount for capital and premium for goodwill. What is premium for goodwill? I just told you that premium for goodwill is the share of goodwill which the new partner brings. Okay, so this is the entry for bringing new partner's capital and his share of goodwill. Okay, children, now you have to focus here. I have written what? When the new partner brings an amount for his capital and share of goodwill in cash or kind. In cash or kind. What do you mean by this? The new partner can bring the amount of his capital and his share of goodwill in cash, and he can also bring it in the form of other assets. That means he can bring the amount of capital and share of goodwill in the form of machinery. He can bring it in the form of debtors. He can bring it in the form of stock. He can bring it in the form of any other asset which is acceptable to the old partners. Okay, so the entry goes like this. If he brings his amount in cash, the journal entry has cash account debit. Okay, if that amount is brought through a check or a draft, it is bank account debit. Or if he brings it through some other assets, the entry is assets account debit, which actually means that if he has brought stock in the form of his capital and share of goodwill, we'll be writing stock account debit. Okay, children, so it is to be understood at this stage itself that the entry for bringing capital and goodwill will be like this, that if he brings the amount in cash, the entry would be cash account debit to new partner's capital and to premium for goodwill. And in most of the questions, in most of the situations, you will find that the new partner is bringing that amount for capital and his premium for goodwill in cash. Therefore, cash account debit to new partner's capital to premium for goodwill, this entry we will be doing most of the times. But if in the question, if it is mentioned that he is bringing it through a check or through a bank draft, then the entry would be bank account debit. Otherwise, if it is clearly stated that he is bringing those amounts in the form of other assets, the entry would be assets account debit. See, not specifically assets account debit, you will be mentioning the name of that asset. So if he is bringing machinery, the entry would be machinery account debit. If he is bringing stock, it would be stock account debit. Okay, children, so you have understood the first entry that has to be passed at the time of admission of a new partner, when the new partner brings his capital and his share of goodwill in cash or bank or in kind. Bringing in kind means bringing through some other assets. Okay, so children, try and understand what I'm moving towards now in the second entry. See, the capital which he has brought belongs to him. That means that capital will remain invested in the business and he will have a separate capital account maintained for himself. Okay, therefore his capital will belong to him and it will remain his capital up to the time the firm is not dissolved or up to the time this partner does not get retired from the firm. Okay, so don't worry about capital. Once the capital is brought, it will remain in the business, okay, under the new partner's capital account. But what about this share of goodwill which he has brought? We have made an entry for share of goodwill in the name of premium for goodwill here. what will happen to this premium for goodwill? This premium for goodwill, children, he has brought for the old partners because they have sacrificed in order to accommodate the new partner into the firm. Okay, so this premium for goodwill will be given to the old partners and they will distribute the premium for goodwill amongst themselves in the sacrificing ratio. They will be distributing this amount in the sacrificing ratio. Now you see, children, I hope you could connect why we had to study the calculation of the sacrificing ratio in the earlier part of the chapter, because for every time you have to make accounting treatment of goodwill, you will be needing the sacrificing ratio, right? And this accounting treatment of goodwill is an integral part of this chapter, because in almost all the questions you will have this to deal with. Okay, children, so I'll move on to the next journal entry and we'll see what the next entry is. So students, I was telling what has to be done with this premium for goodwill. I told you that it will be distributed amongst the partners and it will be distributed by passing this journal entry. Look at the entry: premium for goodwill account debit to sacrificing partners capital accounts. See, when I'm saying that premium for goodwill account debit to sacrificing partners capital accounts, what do I mean? I mean that all those partners who have sacrificed, only they are entitled to receive a share in his premium for goodwill. Okay, so if A and B are the old partners and both of them have sacrificed for the admission of the new partner, the entry would go like this: premium for goodwill account debit to A's capital account to B's capital account. Okay, therefore where I've written sacrificing partners, you will be writing to A's capital account and to B's capital account. Okay, now what would happen if only A is sacrificing, or for that matter only B is sacrificing? The entry then would be premium for goodwill account debit to A's capital account or to B's capital account, which actually justifies what I've written here. I've written two sacrificing partners. That means the premium for goodwill will be given only to the sacrificing partners. If a partner has not made a sacrifice, then he will not be getting the premium for goodwill. Okay, and this premium for goodwill will be distributed always in the sacrificing ratio. Okay, and this has to be noted, right? All of the entries which I have been telling you, they have to be noted. Note those entries properly, and so that you have a proper record and you can refer to them whenever required while doing the questions on your own. Okay, see, we move on to the next entry for retaining the amount of premium. Now what does that mean? Suppose in a question you are told that the partners have decided to retain the amount of premium in the business. What do you have to do? You don't have to do anything. You just don't have to pass any entry for that, because when you have distributed the premium for goodwill amongst the sacrificing partners, it is already retained in the business. You don't have to do any special thing in order to get that premium retained. Okay, you have distributed and it is already retained in the capital accounts of the partners. Okay, so if the question tells you that the amount of premium is to be retained in the business, you don't need to pass any entry. Okay, but on the other hand, if the question requires this, that the partners have decided to withdraw the amount of premium for goodwill from the business, if they have decided to withdraw the amount, then you will have to pass this entry, which goes like this: sacrificing partners capital accounts debit to cash account. Okay, this is the entry when the partners decide to withdraw the premium for goodwill out of the business. Okay, children, sacrificing partners capital account to cash account. So note this down and I'll move on to another entry. See, children, in today's class I'm going to discuss about only this situation where the new partner is supposed to bring his amount for capital and share of goodwill both in cash or bank or through kind. Okay, there is more to it, and most probably we'll be taking up those topics in the next video. In today's class I'll be taking up some questions which I'll explain through the entries which I have already told you. So I'll be taking up practical questions which will make you understand in a better manner how to use these journal entries and when to use them. Okay, children. So I'll take up a question. I'll read a question for you and you will be following. Okay, children. This is a question from the prescribed book which you have, and I'll be reading this question at a slow pace. I want everybody to follow the question carefully. L, M and N are partners sharing profits in the ratio of 3:2:1. They admit O into partnership. O brings in cash rupees 4,50,000 as capital and rupees 1,50,000 as goodwill for 1/5 share of profits. Okay, so we have seen, children, what is the question about. There are three old partners, L, M and O, and they are sharing profits in the ratio of 3:2:1. Now they are admitting O into partnership, and what is O bringing? He is bringing rupees 4,50,000 as his capital and rupees 1,50,000 as goodwill for 1/5 share of profits. Okay, we are required to do what? Pass journal entries and find out new profit sharing ratios when goodwill is retained in the firm and goodwill is withdrawn by the old partners. Okay, children, so now we'll go on to the solution and you have to pay 100% attention to that. Okay, children, so we start with the solution part of this question. And as you have read in the question, we have got three old partners with their old ratio. A new partner O is admitted for 1/5 share. O brings two things: his capital of 4,50,000 and for his share of goodwill, he is bringing 1,50,000. See, children, I've told you that what he has to bring his share of goodwill, which is calculated on the goodwill of the firm. Okay? Therefore, remember always that at the time of admission of a partner, goodwill of the firm will always be valued by any of the methods which we have already studied, right? If it is given directly in the question that the goodwill of the firm is valued at a certain amount, say 2 lakh rupees, okay, you will be calculating the new partner's share of goodwill on that amount of goodwill of the firm, and then you will proceed for the solution. Now in this question and many of the questions like this, you will find that the new partner's share of goodwill is directly given. I hope you understand what I mean to say. If the share of new partner's goodwill is not given and instead the goodwill of the firm is given, then we have to do one little thing, that we have to calculate the share of goodwill of the new partner on the goodwill of the firm. But here we have the share of goodwill of the new partner directly given. Okay, now what is required in the question? We are asked to make journal entries if premium for goodwill is retained in the business and if it is to be withdrawn outside the business. Okay, and there's one more thing in the question, that we have to calculate the new profit sharing ratio as well. So we'll be doing whole of the solution of this question, and we start with this first entry, which is about bringing his amount of capital and premium for goodwill. And this is the entry for bringing his amount of capital and his premium for goodwill. So what amount has he brought? He has brought 4,50,000 as capital and 1,50,000 as his share of goodwill. So in all, he has brought what? He has brought 6 lakh rupees in cash. Okay. Now children, the capital which he has brought, that capital belongs to him. Okay, so we don't need to touch that capital. He has brought that capital and we have transferred it to a new account which is called O's capital account. That capital belongs to him. Okay, for premium for goodwill, what do we need to do? I told you that you will be distributing this amount of premium for goodwill amongst the sacrificing partners. Okay, see, sacrificing partners, which means that you will always require the sacrificing ratio of the partners. Okay, what will be the sacrificing ratio in this situation? See children, while studying the calculation of new and sacrificing ratios, we have seen that in a situation like this, where the old ratio of the partners is given and the new partner's share is given only as a single fraction, there we assume the old ratio to be the sacrificing ratio, and it would not be 100% correct when I'm saying that we'll be assuming. It's not about assuming. Even if you go on to calculate the sacrificing ratio with the whole process, that you calculate the new ratio and then you go on to calculate the sacrificing ratio of the partners, you will find that the sacrificing ratio will be always equal to the old ratio in a situation like this. Okay, where it is only given like this, that the old ratio is 3:2:1 or any other ratio, and the new partner's share is given as a single fraction. Okay, therefore in this question we have the sacrificing ratio straight away in front of us. We are not supposed to calculate the sacrificing ratio. See, in any other question where the new ratio of the partners is separately given, there will be having to calculate the sacrificing ratio separately. Okay, but here we have the sacrificing ratio straight away with us. Okay, so make a connection to the first entry. The first entry was for bringing new partner's capital and his premium for goodwill, and the second entry is for distribution of this premium for goodwill amongst the sacrificing partners. And the entry which I made you write earlier, that entry was premium for goodwill account debit to sacrificing partners capital account, and the sacrificing partners are L, M and N. See, the amounts will be distributed in the sacrificing ratio. That means this premium for goodwill, which is of 1,50,000, this needs to be distributed in this ratio 3:2:1, and the amounts would be 75,000, 50,000 and 25,000. Okay, so children, this is an entry for distribution of premium for goodwill, and I want everybody to remember and note it down also that it was not given in the question that you have to distribute the premium for goodwill. Okay, it will never be given in the question that you have to distribute the amount of premium for goodwill, right? Only this information will be given, that the new partner has brought his capital and he has brought an amount for his share of goodwill. Now this information will automatically make you distribute the premium for goodwill. That means you will yourself distribute the premium for goodwill. It will not be given in the question that you need to distribute. Okay, so this information is enough, that the new partner has brought capital and he has brought his share of goodwill. You will pass the entry for bringing capital and premium for goodwill, and then you will automatically pass this entry for distribution of premium for goodwill amongst the sacrificing partners. And for that matter, you know that you will always require the sacrificing ratio. Okay, now we have to take care of this, that if the partners have decided that the premium for goodwill will be retained in the business, what do you need to do? I had told you just 5 minutes back that when the amount of premium is to be retained in the business, you don't require any entry, because when you have distributed the premium, it has been already transferred to the capital accounts of the sacrificing partners, and it will remain there, which means that it will remain in the partnership firm. Okay, therefore if you're told to pass or rather show the treatment for retainment of that premium for goodwill, you don't need to pass any entry. Okay, and if you are told that the partners want to withdraw the amount of premium, then you will be passing this entry. See, I'm doing this entry in short, and I want everybody to do this in a complete form. Okay, I've written LMN debited to cash account, which means L's capital account debit, M's capital account debit, N's capital account debit to cash account. Okay, and this amount which they had received as premium for goodwill, this will be withdrawn by them outside the business. That means this amount of 1,50,000 will not stay in the business, it will go out. Okay, so this is a simple entry for withdrawing premium for goodwill outside the business. But children, withdrawing will happen only when you have distributed. Okay, so whenever you are told to pass entries in a situation where they are withdrawing the premium for goodwill, first of all you will distribute the premium for goodwill and then go on to pass this entry for withdrawing the premium outside the business. Okay, now in this question you were simply told that the premium for goodwill will be withdrawn by the partners, so you have withdrawn the whole amount. Okay, in some different question you may find that the question tells you that they have withdrawn half the amount out of the business. What will happen then? The entry will be the same. You will simply write half the amounts. Like L had received 75,000 out of premium, he will be withdrawing half the amount. Therefore, half of 75,000, which is 37,500, will be written here. Similarly, half of 50,000, 25,000 will go here. Okay, I hope you understand that if they are withdrawing whole of the amounts, they will be writing all the amounts which they had written in the entry for distribution of premium. But if they are withdrawing half of the amount, or if they are withdrawing 1/4, if they are withdrawing 1/3, you will be writing the amounts accordingly, but the entry will remain the same. The entry will be L's capital account debit, M's capital account debit, N's capital account debit to cash account. Okay children, so I'll take up one more question after this that will also actually improve your understanding regarding this, and then I think you'll be good enough to do some questions, some practice questions on your own, so that you get to know the topic completely. See children, just one more thing before I'll go on to another question. That one more thing is, there's one more situation in a question where you're told that the new partner brings his premium for goodwill privately. Okay, if you're told that the new partner brings his premium for goodwill privately, you will not pass any entries in the books. Okay, bringing premium for goodwill privately means that he will pay the amount privately to the old partners. The old partners will not be making any entry for receiving that amount of premium in the business or for distribution of that premium amongst the sacrificing partners. So if the new partner pays his amount of premium privately, no entry is required. I hope that is clear. Children, I'll be taking up one more question. I'll rub off this from the board and I'll start off with that another question. I'll read that question along with you after a moment. Okay? Okay children, so here we have the next question, and it goes like: A and B are partners sharing profit and losses in the ratio of 3:2. Goodwill appears in their balance sheet at 24,000. Goodwill appears in their balance sheet. Now what is this? I told you that on the date of admission, goodwill of the firm will be valued. That means the partners will be calculating the value of goodwill of the firm on the date of admission itself. But they are telling you that goodwill appears in their balance sheet at 24,000. Balance sheet means what? Balance sheet has already been prepared at the end of the last year. And if goodwill is appearing in that books, you have to do what? You have to simply write off that goodwill. That means you have to finish off that goodwill account. Because of what? Because of accounting standard 26. This we have discussed earlier while studying the meaning of goodwill, about studying the methods of valuation of goodwill, that there is an accounting standard 26 where it is mentioned that goodwill cannot be shown in the books unless money or money's worth is paid for it. Okay, so goodwill cannot be shown in the books unless money or money's worth is paid for it. So if in a question you are told that goodwill already appears in the old balance sheet, it means that it is wrongly appearing in the old balance sheet and you need to write off that goodwill. So we'll have to do that also in this question. Okay children, so I'll continue with the question then. When C is admitted into partnership for 1/5 share in profit, he pays rupees 50,000 for capital and rupees 8,000 as goodwill. The ratio of partners A, B and C in the new firm would be 2:2:1. So here they have given you the new ratio, and when the new ratio is given in the question, you need to calculate the sacrificing ratio before passing the journal entries, and you are required to pass journal entries in the books of the firm to record the above adjustments. So what are we going to do? We are going to calculate the sacrificing ratio first of all as a separate working note, and then we'll pass the required journal entries. So be ready children and do it along with me. Note down the whole solution properly, try and understand. Okay, so let's do it. So children, I've written down this question in a short form for your convenience, and the question we can go through once more, that A and B are the old partners having a ratio of 3:2. C is admitted for 1/5 share. Goodwill already appears, that means already appears in the balance sheet at rupees 24,000, and C brings capital of rupees 50,000 and premium for goodwill of rupees 8,000. Okay, and what are we required to do? We are required to pass journal entries regarding the same. Okay, so as I said, in this question they have given you a new profit sharing ratio also, and because of that new profit sharing ratio, you will have to calculate the sacrificing ratio of the partners. This is the new ratio given in the question. Okay, so we'll make the working note very quickly and find out the sacrificing ratio of the partners. Okay, everyone knows how to calculate sacrifices of the partners. It is old share minus new share, and A's old share is 3/5 and his new is 2/5, and B's old share is 2/5 and his new share also happens to be 2/5, and therefore what do you find? That it is only A who is making the sacrifice. Only A is sacrificing. And now what does this mean? This implies that only A is entitled to get the whole of the premium of goodwill brought by the new partner. I told you that the premium for goodwill will be distributed amongst the sacrificing partners, right? So if only A is sacrificing, the premium for goodwill will justifiably be given only to A. B will not be getting any amount, any single penny from the premium for goodwill, because he is not sacrificing at the time of admission of this new partner. Okay, so what are the journal entries to be made at this time? The first journal entry, first of all, they are giving us this information that goodwill already appears in the balance sheet at 24,000. I told you that this goodwill is to be written off immediately every time in any of the questions. If you find that goodwill appears in the balance sheet, you will be passing this entry, which I am going to do right now. The entry for writing off goodwill appearing in the old balance sheet, and it goes like old partners capital accounts debit, which here means A's capital account debit, B's capital account also debited to goodwill, and this amount of goodwill which is already appearing in the old balance sheet will be distributed in the old profit sharing ratio. And when you distribute this in the old profit sharing ratio, obviously what are you supposed to do? You have to do this very simple thing. You have to distribute this amongst the partners like this. Okay, so it is 4,800 into 3, 14,400 and 9,600. Therefore, the amounts for these entries would be 14,400 and 9,600. Okay, so children, this entry is a very easy one but very important one, because this relates to something. This relates to what? This relates to the provision of AS 26, which tells us that goodwill cannot be shown in the books unless money or money's worth has been paid for it. Okay, and because of that, if goodwill appears in the old balance sheet in any question, you will simply write it off by passing this entry. Okay, and this entry has been passed by using which ratio? This has been done by using the old profit sharing ratio. Okay, so it is the old ratio which is used for writing off goodwill. Okay, so goodwill appearing in the old balance sheet is already written off. Now we need to pass entries regarding bringing of capital and premium by the new partner, and this entry you already know by what we have studied today. Cash account to cease capital account to premium for goodwill account. Okay, and what is the amount of premium brought by the new partner? He has brought 8,000 as premium, and the amount of capital brought by him is 50,000. Therefore, he brings a total amount of 58,000. And what is to be done for this premium for goodwill? We simply have to distribute this premium for goodwill amongst the sacrificing partners. And who are the sacrificing partners in this question? We have already calculated the sacrificing ratio, and we know the situation now that it is only A who is sacrificing. Therefore, whole of the premium will go to A's capital account, or in other words, the whole premium for goodwill will be given only to A. Okay, and for that you need to pass this journal entry. With the whole amount of premium for goodwill brought by the new partner. Okay children, so these are the entries required in this question, and they had told you that there was an amount of goodwill appearing in the old balance sheet. For that, you will have to pass this entry. And what do we call this? We are actually writing off the amount of goodwill appearing in the old balance sheet. Okay children, so what we have done today, I'll sum up in 1 minute. We have started doing this accounting treatment of goodwill, under which we have taken one situation where the new partner brings his amount for capital and his share of goodwill in cash or bank or through assets, which is known as bringing in kind. Okay, which means that there can be another situation as well. What would happen if the new partner brings his capital in cash, but he is unable to bring his premium for goodwill in cash or kind? Suppose he expresses his inability that he won't be able to bring his amount of premium in cash, okay, or in kind also. What would happen then? We'll have to pass some different entry, and that will take up as a different subtopic, maybe in the next video which I'll be posting to you. So children, I hope you've understood all of this. If you haven't understood, go through the video carefully, pay attention to the important points, and then practice some questions on the basis of this. I hope you'll be able to do them yourself, and in case you have any doubts, you know I'm always there for you. You can put up your doubts and I'll be answering. Okay, thank you so much children for the class today. Study well.